morning, everyone. This is Marshall Gidler bringing you the morning comment for April 20th. It looks like the end of the Greek drama is approaching. Greek officials said the country will need to tap all the remaining cash reserves across its public sector to pay civil service wages and pensions at the end of the month. Unfortunately, that leaves no money to repay the IMF or refinance maturing T-bills in May. Over the weekend, senior European officials said that while the Greek debt situation was dire, they still believed an agreement would be reached, according to the New York Times. However, it was hard to see the outlines of that agreement even now. One of the most senior creditors said, "We still do not have a comprehensive plan. Plus, the numbers just don't add up." The administration is trapped in what's called an impossible trinity, in which it's trying to do three things, only two of which are possible: renegotiate the debt, remain in the euro, and stay in office. The only way out that I can see is for them to put together a proposal that will meet the requirements of the creditors, take it to the voters, and ask them, which do you prefer, this or leave the euro? In any event, the Greek problems are starting to impact other markets, as shown by the 2.6% fall in the DAX on Friday. I expect the Greek problem to be one of the main themes in financial markets this week. The People's Bank of China cut the reserve requirement ratio over the weekend for the second time this year. The move isn't a huge surprise given the slowdown in the Chinese economy. Now, Aussie dollar gapped higher at the opening on the news, but in my view, the move is a reaction to the slowdown that's already happened and not a harbinger of higher growth to come. Thus, the rally in Aussie is likely to prove only temporary, in my humble opinion. Today's highlights: there's little on the schedule today. In the U.S., the Chicago Fed National Activity Index for March is expected to improve. We have a couple of speakers. The ECB's Mr. Constantino speaks at the European Parliament in Brussels. New York Fed President Dudley speaks on the economy and policy in New York. And later in the day, RBA Governor Stevens will deliver a speech in New York. As for this week, the main focus this week should, in theory, be the European finance ministers meeting on Friday, when they're supposed to take a decision on the Greek reform proposals that are supposed to be submitted today. However, since the proposals probably won't be submitted today, they'll have nothing to vote on. Still, the markets will be waiting to hear their comments, if any, on the Greek situation. As for indicators, the big day will be Thursday, when the April PMIs for the major countries are announced. This is, as usual, the first data for the current month, and so it will set the tone. There are no central bank meetings this week, but we do get the minutes of two recent meetings, the RBA on Tuesday and the Bank of England on Wednesday. The biggest U.S. indicator of the week is probably durable goods orders for March on Wednesday. We also get existing home sales for March on Wednesday and new home sales on Thursday. Aside from the PMIs, the other big Eurozone indicators this week are the ZEW survey for April on Tuesday and the IFO index on Friday. The only major UK indicator this week is retail sales for March on Wednesday. On Wednesday, we also get Australia's CPI data for the first quarter. For more information, including technical analysis, please read the full comment on IronFX.com. You can also follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google+ to get more trading ideas. This is Marshall Gidler, head of Global FX Strategy at IronFX Global, wishing you solid trading.